Hi, good morning, my friends. It's Louisa here. It's Wednesday, June the 4th, and I'm going to take you through my trade from this morning. I haven't traded very much this week because it's non-farm payroll. It's not my favorite week to trade. If I do trade, which is very limited because of the volatility, I reduce position size significantly. But this morning I took the Venom setup. I'm really loving this new strategy by ICT. And what I'm going to do is give you an opportunity to screenshot my notes on how to trade this. And in the description of the video, I'm going to put a link to ICT's descriptive video on how to trade Venom. But it's very simple. You can see that the trade either sets up or it doesn't. So it's a very high probability trade, and it's becoming one of my favorite ICT strategies to trade. So with no further ado, let's jump into it, and I'll take you through my trade that was just shy of 100 points this morning, even with the news, which is kind of cool. All right, then, here we go. Now, this morning we had key news at 8:30, and I'm going to share this news with you because it was quite significant. We had non-farm employment change, and the forecasted amount was 111,000, and actually we came in at 37,000, and that is significantly lower than forecasted. So that was, well, you know, it's good for Fed and bad for people, to be honest. So anyway, so that was quite a significant drop. The ISM services, which released at 10 a.m., I didn't pay much attention to that. I was actually in my trade before this news released or launched. So let me just show you the setup. Now with the Venom setup, it's very simple strategy to understand. I'm going to take you through that strategy first, just so that you guys understand what the strategy actually is. Now these are my notes that I took from ICT's video. I urge you not to trust my notes, because my notes are my interpretation of ICT's information. So I suggest that you go to his tutorial, and I'll link this in the description below. And I suggest that, you know, you can take my notes and then adjust anything that you either agree with or disagree with and make it your own. But basically, the Venom entry model is a morning strategy. First, we identify the trend of the market. So on the higher time frame, meaning the weekly and the daily, are we bullish or bearish? So in my view, we've been quite bullish. Next, you mark out the high and low between 8 a.m. and 9:30. You mark the buy side, you mark the sell side. Very simple, between 8 a.m. 9:30 Eastern Standard Time, as always. If the trend is bearish, then at 9:30, when the market opens, we should see price make a run for the highs, which is the buy side, to take out the stops before going to the sell side. Okay, so if the market is going to go lower, it has to go higher first. I think we all agree on that. Next, in this trade example, look for the candle that runs to the buy side. It needs to punch through the relative highs. Okay, so it needs to be aggressive. That punch through is the Venom. Now, there must be inefficiencies left on the run up and the run down, which would create a balanced price range. Okay, so on the run up, we want to see an aggressive run up, which is going to create those BISIs or fair value gaps. And then on the run down, we also want to see SIBIs, which is fair value gaps to the downside. So it has to be an aggressive move up and aggressive move down. And I'll show you on the chart that did happen this morning. The Venom's candle body must close above or below the other candle highs and lows. So we'll take a look at that on the chart this morning. This is the signature that the Venom setup is in motion. How do we trade this? Well, we trade this like a turtle soup. It's one of the highest forms of reversal patterns. So other than a breaker block, change in the state of delivery, this would be, you know, a high reversal opportunity. The violet candle down with a close below the Venom candle is the signature change in the state of delivery. The low risk entry is the candle that trades back up, and I'm going to show you that this morning because that happened beautifully. Where's the take profit? The take profit is the opposite buy side or sell side. So if the Venom candle is punching through the buy side, then we're going to put our take profit at the sell side, the opposite direction. Time price delivery, we focus on time first. So this strategy is best used in kill zones. I'm experimenting with it in the London. Kill zone in London is 3 a.m. Eastern Standard Time, but mostly I'm using it in the New York Open. If price does not sweep the buy side or the sell side, that's okay. There is no trade. We're not forcing anything here. And then our next opportunity for a trade would be time-based again, and it could be the silver bullet. Between 10 and 11 a.m. So if there's no Venom trade for the morning, then wait for between 10 a.m. and 11 a.m. and look for that silver bullet setup. So let's go to the chart, and I'm going to show you how this trade set up quite nicely this morning, and I had a 94-point run. All right, now I was on the 1 minute, and I'm going to highlight here where the Venom candle was. It was best seen on the 2 minutes. So I'm always rotating between the time frames. So here is the punch up. So here is this blue line here is my 8 a.m. to 9:30 high, and this blue line down here is my 8 a.m. to 9:30 low. So this is the sell side, this is the buy side. Okay, hope everybody can see that. So when price opened at 9:30 this morning, we were between the buy side and the sell side. So we wait for either side to be taken. Now in this particular instance this morning, we see that the buy side was taken, so we had a big candle up with displacement. It's strong, and we had a nice punch with this wick. Now we had an aggressive candle down. It didn't quite close below the Venom candle, but if you look at the 1 minute, 2 minute, or even 5 minute, we can see it here. So here on the 5 minute, we see the punch up with the wick, and then we see the displacement down with a close below here. So this is our Venom setup. I'm going to go back to the 1 minute here, but I just want to show that this is what a Venom setup looks like. Now, to give you another screenshot you can take, this is the entry model. You can see this is ICT's screen. So we have a move up, we have a punch up, here's the Venom candle here, we have a change in the state of delivery, price comes down, and then when it returns into this fair value gap, this is where we enter. Okay, so you can feel free to take a screenshot of this. Okay. So I'm going to go back to the 2 minute, but I wanted to show you like the Venom candles, okay? And if we go back to ICT for just a second, can you guys see the punch up and the punch down? So these are the Venom candles. So punch up and punch down. So it's like green going up and black coming down. So it's very obvious that it looks like two fangs of a snake or something. I'm terrified of snakes, but anyway. Okay, so let's move to the 1 minute, and I'm going to show you where the fair value gap was. So with this Venom model, what we want to see is we want to see a balanced price range. So we want to see a fair value gap on the way up. So we've got this fair value gap here, which is the first fair value gap of the day. And then we have strong movement down. So we have this candle up, this candle down. And on the way down, we have this beautiful fair value gap. This would be our SIBI. Okay, so we have a balanced price range. Balanced price range. And this is all happening between 9:30 and 10. Okay, so here's our 9:30 open. So we have this Venom candle up, and then we have the strong displacement down, this Venom candle down. So two things. Now we wait for price to come back up into the fair value gap. Now this morning, because we've had a volatile morning of news release for non-farm payroll unemployment, we had a little bit of a mohawk just outside of this fair value gap, but I still held strong to my belief that price was going to move down because we had swept above the 8 a.m. to 9:30 a.m. high. So I waited. I want some confirmation that price is indeed going to drop. And when it started dropping down through this SIBI, I entered here at 21,763. Okay, so that was like right here. I took 2 contracts. I went very conservatively because, again, we're in a very volatile week. And the next news release was at, I think it was 10 o'clock. So I entered at 9:51. You can see, if you look down here, you can see I entered at 9:51. So I did have a lot of confidence in this trade. Normally I wouldn't take a trade prior to news release, but this model is proving very, very predictable. Okay, so that's why I want to share this with you. So I entered here at 21,763. Price then had like a huge drop down when 10 a.m. news was released. But my stop loss, I want to share this with you. I put my stop loss up here. Okay, so this was my stop loss. I had a very generous stop loss because I didn't want to be wicked out. But I was confident that price wasn't going to move above this, okay? So I kind of covered myself there. So price dropped down. This is a 3.39 risk to reward, so it was a beautiful risk to reward, and I exited down here at 21,669. So that gave me 94 points. Now I want to show you something interesting here. Price wicked down. So if you think about the opposite of what happened up here, okay, we had a Venom that punched through the buy side. Well, we equally had a candle that punched through the sell side, and the next candle closed below this Venom candle. So if I hadn't been busy this morning, I probably would have taken this long. So if you missed this opportunity set up very nicely too, and it was after the news release. I'm probably a little safer. So I did want to share this with you. That's how versatile this setup is, and it's very, very simple to see. You don't need to force anything. You are waiting for a punch above or a punch below the sell side or buy side, which is between 8 a.m. and 9:30. Okay, so you just mark out between 8 a.m. and 9:30. So here's my 8 a.m., right? So here was my low, here was my high. Wait for either side to be taken. We want a punch up and a punch down, and we want a fair value gap on the punch up, and we want a fair value gap on the punch down. You wait for price to come back into the fair value gap, and you go short or you go long. In this particular case, if we turn this upside down, entry would have been in this fair value gap. However, price was moving pretty fast. These are breakaway gaps. So price never did come back down here, but if you had recognized this as breakaway gaps, you might have jumped in. It's very, very strong candle to the upside. Anyway, guys, hope you're doing great. I hope that your week is going well and that you are trading with discipline, with patience, and with passion. All right, then, guys, have a wonderful rest of the day. I am done. I will be trading Thursday, but not Friday. My dog Pi has a vet appointment for his summer meds and tick and flea stuff. So I will not be trading Friday, but we'll see if I can find something tomorrow, Thursday. So peace out. Have an awesome day. Bye for now.